All right, guys, a little bit of an unfortunate day today, right? The market sold off. It was a bloodbath. Absolutely. So in this video, I'm going to do something a little different. So for those of you who've been following, I typically cover, stocks, things like that specifically. But in this video, let me learn you something, okay? In this video, we're going to talk about how to kind of predict these market reversals, right? How to kind of forecast them, right? Me personally, I kind of smelt this coming, but obviously I don't know the exact timing of that. Regardless, I'm going to walk you through, how can we do this step by step, at least from a technical standpoint. I know there's a lot to this, right? But from a fundamental standpoint, I'm going to walk you through each of the major indices. I'm going to explain what each one is. I'm going to explain to you, right, how you should keep these in mind while you're looking to invest and trade in your stocks. Now, before I get started, smash that like button, baby. Also, feel free to comment below. Again, I'm going to miss some details. What I'd like to see in the comment section is some suggestions on some resources we can find, right? So I'm going to talk about more technicality things, right? I'm not going to talk about, resources we can refer to because there's so much that influences the market. But from a technical standpoint, you can still bake in some predictability. And of course, feel free to subscribe to the channel. What you get is daily uploads on some of the top stocks on Wall Street, including live streams I host every week, where you get to hear from me some of your favorite stocks. Share them with me. I'll do quick technical analysis. Now, quick plug, if you feel like joining our Discord channel, nearly 1,000 members now, check the links below. I got some links to my Patreon page where you can hop on in and join the community. We'd love to have you. Enough plugging. Let's get right into it, guys. Okay, so here I have a trading platform known as Thinkorswim. Okay, now I'm going to pull up some of the top indices, right? Stock indexes. For those who don't know, they're essentially a nice benchmark for kind of seeing how the market is moving. So let's talk through each one of these. The first one that I have here up on my screen is referred to as the NASDAQ 100. So you might hear the term quite often known as futures, right? Or indices or index, right? Again, these kind of are a good benchmark. This is how people kind of forecast the market. A lot of hedge funds use this. A lot of financial firms like to refer to these so they can, kind of forecast the next price movement overall for the stock market. Now, again, this is the NASDAQ 100. So what is this? This essentially is compiled of the top 100 technologically based companies, both US and then companies outside of the United States as well. Okay, so that's what's a little bit unique about this. It's not all United States companies, but it's a good benchmark for tech sector stocks. I personally refer to the NASDAQ very often. Quick highlight, guys, right? Check this out, right? Huge sell-off today. And it does look like we are still sitting in pretty good momentum. Now, the main point I want to make here, right? How can we see this technically coming? Well, if I ignored today's movement, right? If I take this out of the picture, which is essentially today, generally speaking, you can see, right, we were extended to death, right? Generally speaking, we've been kind of sitting in this ascending channel pattern, which is good. The market's been bullish, right? We've been kind of bullish ever since COVID, especially the tech sector. So you won't see as much of that dip down here. Why? Because they had companies like Zoom in it and things like that. Just a lot of those tech heavy stocks that were kind of just keeping the market a lot more stable. Now, as you can see, right, we were extended to death, right? This stock, this index was running up nonstop for about 6 days straight. We saw a little bit of a correction, and then we tried to come back, and then we just had our huge sell-off. So arguably, this is very healthy, right? We've seen this historically multiple times. This green line down here, I like to refer to as my 180-day moving average. That's what it is. And you can see historically, right, we've touched it multiple times and we rebounded every time. And now that we're approaching that level, I feel pretty confident that we could rebound pretty soon. But however, like I tried to mention, we are sitting technically in some pretty good negative momentum right here. There's a couple indicators you can cross-reference as well, such as my MACD indicator, right? There's a price momentum indicator. We're still sitting in pretty bearish momentum right now, but the RSI does look favorable. Essentially, like stocks are highly discounted right now as they are very oversold, right? So let's talk about some of the other indices while we're at it here. So the NASDAQ 100, that's a major index. The next one everyone knows, everyone's heard about, is the Dow Jones Industrial Average. So the Dow Jones represents essentially 30 of the largest and most influential companies in the United States. Okay, so these are all US companies. This is known for like more your blue chip stocks or like your high dividend companies. Now, again, as you can see, the Dow Jones didn't suffer much of a sell-off, but it's kind of overdue right now. The Dow Jones is really the only index that kind of held strong today. And a lot of it is because a lot of the Dow Jones is comprised of like a lot of retail-esque stocks, right? Retail did fairly good today. Retail has been kind of recovering, right, as part of the world is reopening. There's a lot contributing to this. Again, technically speaking, it's a little extended right now. I think the Dow Jones has opportunity to sell off next, but historically speaking, Dow Jones it's been cruising pretty good. We've seen one substantial dip in about the last, 3 months. But other than that, it's been cruising pretty good. It's been holding strong above that line versus the other index, which was the NASDAQ. Let's talk about the third major one, which is the S&P 500. This is perhaps the most significant index, in my opinion, that represents the overall health of the US stock market. So as you can imagine, the S&P 500 is the top 500 companies in the US stock market. It represents 80% of the total value of the US stock market. So again, that's why it's such a good benchmark. And as you can see, the S&P had a little bit of a dip today as well, okay? So, right, it's explaining a lot of things, right? Technically speaking, you can kind of forecast this. This thing was extended to death, but it's kind of like the Dow Jones in a sense, right? It's kind of holding above here pretty well. Had that same kind of dip, that we saw within the last 3 months. But other than that, it doesn't really sell off as aggressively, but you can see, right, it is approaching that potential point of a reversal, potentially speaking, assuming that we're holding this dynamic support line. Now, I'm going to throw in some bonus indices in here as well that you can also use in correlation with these other three major ones. But these three major ones, these are known as like the futures: the Dow Jones, the S&P 500, and the NASDAQ. You want to keep those on your back pocket when you're looking to jump into a stock at any point in time. It's always good to consider that, okay? Bear that in mind. The bonus one I want to throw in here, first of all, is called the VIX. This is essentially the volatility index. One real easy way to utilize this is that essentially this is going up. That means market volatility and kind of the margin of volatility has been increasing. So again, another way to look at this is kind of inversely correlated to the market. As volatility goes up, the market typically experiences an aggressive sell-off in some sectors, more or less. And you can see as we pushed up today, right, the VIX is up 6.35%. That's huge. But the rest of the other major indices are essentially down, except for, the Dow Jones, which didn't really move today at all. So that's that. And then the next one you can use, and I like to use this one, this is known as the Russell 2000. So the Russell 2000 is really good. This essentially comprises of 2,000 small cap companies, hence Russell 2000. But the small cap companies, right? This is a good benchmark for essentially like major penny stocks, right? So this, the way that this is performing can typically correlate with how penny stocks are performing. So it's good to always have this full list of indices as a benchmark. Me personally, I like to use these top 5. I think they're fine, right? You have your three majors, right? The SP, Dow, and then also the NASDAQ 100. And then of course you have your side guys, right? You got the VIX, which is good for measuring, forecasting volatility. And then you have the Russell 2000 if you like to trade penny stocks, because I know you guys love them penny stocks, baby. Let's go. Now, let's talk about how we can play this, right? So I talked about technically how we can somewhat forecast it, right? You can just look at it as any other stock, right? If this thing is pushing up like a machine, right, it's due for correction. Then I think the NASDAQ is the best representation of this, right? Look at the NASDAQ today, right? You can see over time, right? It rebounds nicely every time, right? 9 times out of 10, this thing rebounds as it approaches generally my moving average line here. Now that we're in the vicinity of it, right, we can still sell off. It doesn't necessarily mean buy the dip, but I think there's a lot of dip buying opportunities. Why? Because historically speaking, it's just been appreciating, right? This is called a correction. This is totally healthy, totally normal in the stock market. And that's why in all my videos, I always disclose. Whenever I talk about a stock, I do technical analysis. I always disclose anything can happen in the stock market. And unfortunately, that pullback happened today. It could happen tomorrow. It could happen, 2 trading days ago, right? Which was Thursday. But anything can happen. That's why you gotta be ready for it. But if you coincide these indices with your ultimate trading plan or investment plan strategy, this can ultimately help you in the long run. So the next thing I want to talk about is, how can we trade these? How can we trade the red days? It is very possible. Now, I'm not talking in sense of like, the companies that are outliers, right? There's going to be companies where the whole market is taking a dump and these companies will still be appreciating. A lot of that can be hype, manipulation, momentum. But how do we actually trade these? What are some stable ETFs that we can trade? Now, you got to be very careful with these. I don't highly advise it for the faint of heart. But if you are experienced of a trader, we can look at inverse ETFs. One of them is known as the SQQQ. This is a good one you can play. Now, one thing you gotta be cognizant of, right? This is a short-term thing. This is a quick day trade strategy. I wouldn't even swing trade this, to be honest. Why? Because you can see this thing decays over time. Why is it decaying over time? Because it's inverse to the market. The market is always appreciating over time, net on average, and that's why the United States goes, baby. But, look at this today. This guy was up 8%. We could have played this today if we kind of forecasted ahead of time. Hey, the market looks like it's just going to keep on with this negative momentum, right? We could have made some nice gains today. If we look at it again, let's go on the 1-day chart. This thing chucked up like a machine. So these are some inverse ETFs. There's another inverse ETF that we can use to trade in the red days, right? The bloodbath. Let's talk about it. SPXS. This is also a phenomenal one, but again, it's not for the faint of heart. It's not as cheap as SQQQ, but in my experience, it's been a little more volatile, so there might be a little more opportunity there. But again, high level, right? 180-day chart, you can see this thing decays over time. But again, add this to your list if you are experienced for opportunities on down days in the market. This one was only up 2.24%. So SQQQ was the better and more volatile play today. But again, you can play either one of these. SQQQ is very, very cheap though, $13.52 at the current share price. So not too bad there. But again, those are just some strategies you can utilize in those bloody days. I hope this video helped you out today, guys. Again, I know it's a little different here, but I need to start, trying to help you guys a little more on this channel. And I think part of that, again, is taking a step back. Okay, let's learn from today, right? It was red for everybody. Everybody lost tons of money. I lost tons of money. I get it, right? Either way, these are some strategies you can utilize. Okay, let's look at the key indices. I look at these relentlessly. Every time I wake up, these are the main things I look at, right? These tell me whether or not it's going to be a red day. If you've ever wondered how people kind of know that, they benchmark the major indices, right? They look at the Dow Jones, the S&P 500, and the NASDAQ. I highly recommend those. The VIX and the Russell 2000, that's more of a preference, but you can coincide it with predicting the ultimate market movement. So I hope this video helped you out today, guys. Smash that like button and feel free to subscribe to the channel. What you get again is daily uploads from your boy on some of the top stocks in the market today. Also, I host live streams twice a week, in the middle of the week and at the very end of the week, typically on Sundays, leading up to the following trading week. So I can get you all fired up. And you can share with me some of your top stocks as well. Also, if you're interested in joining our Discord channel, check the Patreon links below. Come on, support the channel. I got you covered. You can hop into our Discord. We have nearly 1,000 members, right? Good luck to you guys the rest of this week. Hopefully you can jump into some cheap opportunities, right? Buy the dip, but essentially don't ride into the FOMO, right? Like I mentioned, right? I think the momentum is still there. I think we could sell off a little bit more, but let's wait for confirmation of a reversal in the overall market. Again, good luck to you guys and happy trading.